Hello everyone, welcome to another episode of Ask NDB Wealth mid-month market update for the month of December. I am Harini Vijayaratnam and with me I have my colleague Vihanga Jaisingha who will start off today's discussion.
Thank you, Harini. After much deliberation, the approval of the second tranche of the IMF bailout, initially delayed from September, occurred on the 13th of December, amounting to USD 337 million. This approval brings the cumulative disbursement of IMF financial support to USD 670 million. The IMF highlighted the program's overall satisfactory performance, meeting all criteria for the end of June, except for that related to expenditure arrears. Looking at the fixed income market, the first 2 weeks of December witnessed a persistent downward trend in treasury bills across all three tenors. The benchmark 12-month treasury bill rate decreased by 6 basis points to 12.83%, and the 6-month rate dropped by 23 basis points to 14.29%, and the 3-month rate declined by 27 basis points to 14.59%. Furthermore, the central bank conducted a bond auction during the week, offering a total of 160 billion in 3, 5 and 7-year bonds. The auction generated substantial interest with almost double the bids received compared to the total amount offered, primarily concentrated on the shorter end, namely the 3 and the 5-year bonds. Although the central bank successfully raised the funds from the 3 and the 5-year bonds, the 7-year bond was rejected at the auction. The 3 and the 5-year bonds were accepted at a weighted average yield of 14.07% and 14.32% respectively. In secondary markets, the response to the IMF review led to a decline in yields across all durations, with the majority of the decrease observed on the short end. And with that, over to you, Harini, to continue with GDP.
Thanks, Vihanga. On 15th of December 2023, the Department of Census and Statistics reported positive economic growth of 1.6% in the third quarter, ending 6 consecutive quarters of contraction. Agriculture, industry and services sectors also expanded at rates of 3%, 0.3% and 1.3% respectively. After approving the initial review of Sri Lanka's $2.9 billion bailout, IMF forecast the economy to contract by 3.6% in 2023. In the initial 9 months of 2023, the government generated a total revenue of 2.1 trillion rupees, attributed to higher tax rates and the introduction of new taxes. Meanwhile, the total expenditure for the same period increased significantly by 38.5% to 3.7 trillion rupees compared to the previous year. This surge was primarily driven by a notable increase in recurrent spending. Consequently, the overall budget deficit widened to 1.6 trillion rupees during the 9 months, up from 1.2 trillion rupees in the corresponding period last year. The revised budget estimates for 2023 anticipate the overall deficit to reach 2.4 trillion rupees, equivalent to 8.5% of the GDP. In November, the foreign reserves remained around $3.5 billion and the IMF forecast the gross foreign reserves will reach to $3.8 billion by the end of the year. This falls short by $600 million compared to the program request, indicating a deceleration in the reserve accumulation in the second half of the year. This slowdown is attributed to increased demand for foreign exchange by the banks. The combined earnings from tourism and worker remittances held steady at $1.8 billion and $5.4 billion respectively. In November 2023, the Purchaser Managers Indices for manufacturing and services activities posted index values of 57 and 59.4, showcasing the positive month-on-month growth and improvement in both manufacturing and service sectors. As of 15th of December 2023, the Sri Lankan rupee has experienced a 0.6% appreciation, reaching 326 rupees and 60 cents compared to the 30th of November 2023. Looking at the equity market, the ASPI and S&P SL20 indices have risen by 1.4% and 3.1% respectively as of 15th of December 2023 compared to 30th of November 2023. This positive trend may be attributed to growing market confidence stemming from agreements with the Official Creditor Committee and the successful approval of the second tranche by IMF. The average daily turnover during the period stood at 764 million rupees with net foreign investments totaling 145 million rupees. Thank you.
Thank you, Harini, and thank you for joining another episode of Ask NDB Wealth.